So here's a little word of warning for all you Robinhood investors out there. Be careful. Make sure that you are paying attention to micro and macroeconomic news situations, government spending, stimulus, all those types of things, quantitative easing. Wall Street is setting you up. So be careful. Make sure you understand what you're getting yourself into when you look at the stimulus trades, the stay-at-home trades, all of the economic news and uncertainty that's going on out there. What you got to understand is the coronavirus is not going anywhere anytime soon. But then once it does get behind us and we do get a cure and we put this whole thing behind us, then all those stay-at-home trades may not be so great anymore. Those companies are thriving right now due to the pandemic, but once we get this thing behind us next year, those are going to be very different outlooks and very different outcomes for a lot of investors and a lot of companies. So just be careful. Make sure you're looking for long-term. Short-term trades are one thing, getting in and getting out, but make sure that you understand the top and you get out at the top. It's always better to call the top than the bottom. Right now, you're buying in at the peak. A lot of the older generation are selling their stocks and selling their portfolios. It's October right now. As we get closer to the end of the year, if we get a blue wave, there may be a wave of selling. So be aware of that and be ready for that because of the capital gains structure and situation. So if you're going to be trading, just make sure you understand the things that move markets. Make sure you understand that you got to buy low and sell high, and just understand where the top is, and take some profits, and don't be afraid to take a profit, right? So make sure that, once you've locked in a gain, go ahead and realize that gain. Nobody ever went broke taking profits, okay? The only people that go broke are the ones that try to extend their gains and get a little greedy, and there isn't a whole lot of upside right now. The stock market is maxed out. It's capitalized by the Fed, and that Fed put is only going to last so long. The fundamentals of the economy are not sound. Underlying the economy, all of the speculative plays right now are going to end once we get the coronavirus behind us, and those stay-at-home plays and the coronavirus plays are no longer valid. So those will start to unwind. But just remember, Wall Street is setting up the retail trade investors. So just be careful. Make sure you understand what you're doing. Follow the big money. Follow the Fed. And do not bank on the Fed put forever, because they cannot recap the entire market once it starts to go down.